Welcome to the deep dive. Today we're going to be cracking open the Kenya Finance Act 2023.
Oh, cool.
It's kind of like the blueprint for Kenya's economic moves for the year,
Mm-hmm.
and we're going to go beyond the headlines to uncover what it really means for you.
Love it.
We've got the official Kenya Gazette supplement right here.
Oh, wow.
So this is where it's at.
Okay.
This is where all the changes are laid out, and
It's like having that sneak peek
Yeah.
into Kenya's economic strategy.
exactly. And this sneak peek is full of surprises.
I bet.
What really struck me is this act isn't just like a one-and-done kind of deal.
Right.
It has like a rollout plan,
Uh-huh.
with some parts already in effect and others coming later on.
It's very strategic.
Yeah.
Some sections kicked in on July 1st, 2023.
Okay.
Then we had more changes on September 1st,
Yeah.
and there's another wave coming on January 1st, 2024.
So if you're like a business owner in Kenya,
Right.
or maybe thinking of investing there, you need to know what's already changed and what's on the horizon.
Absolutely.
That's what we're here to help you with.
Yeah.
One of the biggest takeaways for me
Okay.
is Kenya's clear focus on the digital world.
It's a huge theme in this act.
Yeah.
They've meticulously defined digital content monetization, listing 8
Oh,
specific categories,
gosh.
everything from website ads,
Done.
online courses,
Yeah.
subscriptions, and even crowdfunding.
Wow. So they really thought this through.
Yeah, they're not messing around.
It's a clear signal that Kenya is getting serious about taxing income generated online.
100%.
It goes beyond just defining what's taxable.
Right.
They've introduced a brand new 3% tax on digital asset transfers.
Oh, wow.
And here's the catch.
Okay.
It's on top of your regular income tax.
Oh, so double taxation potential there.
If you're dealing in digital assets in Kenya,
Right.
whether you're a resident or not,
Interesting.
get ready to pay up.
Yeah, it's a bold move by the Kenyan government. It'll be interesting to see how this impacts the digital economy there.
Absolutely.
You know, it's a sign of the times, for sure.
Yeah.
It's not just the digital landscape that's seeing changes.
Well, really.
There are some interesting adjustments for employee perks and deductions, too.
Oh, yeah. I noticed that.
Like, remember the days of arguing with the tax man about your mileage deductions?
Oh, yeah.
Those days are over.
Really?
Now there's a set standard mileage rate determined by the Automobile Association of Kenya.
So it takes the guesswork out of it.
Exactly. It's a move towards simplification and transparency.
Yeah.
No more room for interpretation or negotiation,
That's good.
which is good news for both employers and employees.
Right. It streamlines the process for everyone.
Absolutely.
But there's another change that caught my eye.
Okay.
And I'm not sure if it's good news or bad news.
Hmm.
It's about those club memberships that some employers offer as perks.
Ah, yes. The act now allows employers to deduct club fees.
Okay.
But here's the nuance.
Okay.
It's only for entrance and subscription fees.
Mhm.
Those after-work drinks and lavish dinners,
Right.
no longer deductible.
So if you're an employer,
Yeah.
you can help your employees get their foot in the door, but you can't foot the bill for their entire social life.
Right.
How do you think this will impact company culture?
It's a question worth pondering.
Yeah.
And speaking of pondering,
Yeah.
there's this intriguing section about eligible startup companies.
Oh, yeah.
They've laid out specific criteria.
Right. Like annual turnover
Right.
type of business and how long it's been operating.
Exactly. And what caught my eye was this potential tax break for employees
Yes.
who receive shares in these startups.
It's a clever strategy
It is.
to attract and retain talent in the burgeoning startup scene.
Right. By offering tax deferrals on those shares.
Yeah.
They're sweetening the deal for employees
Yeah.
and potentially fueling innovation.
It's like a win-win situation.
It is.
It's a golden ticket for employees.
Yeah.
With the potential for a big payoff down the line if the startup takes off.
Absolutely.
Now let's shift our focus to the world of property and investment,
Okay.
where the act is making some waves,
All right.
particularly in the definition of immovable property.
Interesting.
Hold on, immovable property.
Yeah.
I mean like land and buildings.
Well, now it explicitly includes mining and petroleum rights.
Oh, wow.
It's a significant expansion of the definition,
I see.
with potential implications for valuations
Uh-huh.
and taxation
Right.
in these resource-heavy industries.
So if you're a player in mining or petroleum in Kenya,
Yeah,
this is something to pay attention to.
for sure.
Could impact your bottom line.
Absolutely. And speaking of bottom lines,
Yeah.
there's an interesting new deferral for capital gains tax on property transfers between entities within a group.
Oh, okay.
But as with everything in this act, there's a catch.
I knew there had to be.
The group must have existed for at least 2 years. And the restructuring cannot involve transferring the property to a third party?
Uh-huh. So they're encouraging internal restructuring within established groups.
Yeah, exactly.
But they're not keen on asset shuffling to outsiders.
Right.
Makes sense.
Transparency and control are key themes in this act.
Yeah, absolutely. And that theme becomes even more apparent
Okay.
when we look at how the act is beefing up tax enforcement.
Oh, so...
Withholding tax, even if paid to a non-resident,
Right.
is now non-refundable if there's an audit adjustment.
Wow.
So no more, oops, I made a mistake of getting your money back.
So the stakes just got higher.
The stakes for accurate reporting just got a lot higher.
For sure.
It incentivizes meticulous record-keeping and reporting from the get-go.
100%.
And it's not just about individual accuracy.
No.
They've also lowered the thresholds for country-by-country reporting.
That's right. More companies will now have to provide detailed financial information
Wow.
across their global operations,
Okay.
giving Kenyan authorities greater visibility into their activities.
It's a clear message. If you're doing business in Kenya, be prepared to play by the rules
Absolutely.
and be transparent about your operation.
Transparency is key.
But hey, they're also offering a bit of a carrot along with the stick.
Oh, a carrot. What's that?
They've introduced a tax amnesty program,
Okay.
but it's got a very specific time frame.
Gotcha.
The amnesty applies only to penalties and interest on unpaid principal tax.
Okay.
That was due before December 31st, 2022.
So it's a chance for those with outstanding tax issues
Yeah.
from that period to get a clean slate.
You got to act fast.
Okay,
So we've covered the digital world,
Yeah.
employee perks, property changes,
Mm-hmm.
and even tax enforcement.
What's next?
Now let's dive into some of the more intriguing details that really caught my eye.
I'm ready.
First up, repatriated income.
Okay.
They've got a whole new Section 7B dedicated to this,
Wow.
complete with a specific formula for calculating it.
So they're paying close attention
Yeah?
to non-residents doing business in Kenya?
Making sure they pay taxes on profits
Right.
sent out of the country.
So no more siphoning off profits without paying your dues.
Nope.
And now for something completely different.
Okay, let's hear it.
The curious case of imported powdered juice.
Powdered juice.
Why is this specific item hit with a tax of 25 shillings per kilogram?
That's a great question.
I know.
The Act doesn't explicitly explain the rationale,
Right.
but it does raise some interesting possibilities.
What do you think it could be?
Well, it could be aimed at promoting local fruit production
Okay.
or encouraging healthier beverage choices.
Or maybe they're trying to boost domestic manufacturing
Right.
by making imported alternatives less appealing.
It's a bit of a puzzle.
Yeah, it highlights how targeted this act is.
Yeah, they're looking at specific products
Mm-hmm.
and industries
Yeah.
and making strategic moves.
Speaking of strategic moves,
Yeah.
there's also a major overhaul of the export levy on hides and skins.
Oh, really? Tell me more. They've changed the rates and even removed some categories altogether.
Wow. So this move could be aimed at bolstering Kenya's local leather industry.
Yeah, by adjusting the export levy.
Right.
They might be encouraging businesses to process hides and skins locally rather than exporting them raw.
That makes a lot of sense.
If you make it more appealing to process those materials in Kenya, you create jobs,
Yeah.
add value to the exports,
Uh-huh.
and potentially boost a whole industry.
Exactly. It's a great example of how seemingly small changes in the act
Right.
can have far-reaching consequences.
It's fascinating.
It is, but we've only just scratched the surface.
I know there's still much more to unpack in this Finance Act.
So much more.
You're absolutely right. In Part 2, we'll be diving into topics like the Affordable Housing Levy,
Oh, yes.
the changes to the Kenya Roads Board,
Can't wait.
and a whole lot more.
I'm excited.
So stay tuned.
Definitely.